Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, August 5th, 2013. Well, a continuation to the uptrend today, and today we've seen a candle with a lower high but a higher low, and in bar chart terms that's an inside day, a day of indecision, and a day that doesn't change the trend to the downside. Therefore the previous trend remains in force, and that was a trend to the upside with the previous candle making a higher high and a higher low. The previous day trading we saw a small white body at the end of this uptrend, and following a very large white body candle it suggested there was a possibility of a change of trend. It was a hanging man type pattern and did suggest potential for a change of trend, but we were looking for confirmation, which would have been a candle with a lower high and a lower low. Now obviously the area at 1700 is very solid resistance, support, now that it was previously resistance, and now for the previous day's trading is acted as support, and moving forward it will be a very solid area that may be a barrier to any potential downside move. For today's trading we have a very small black body candle, so this means that the sellers have made a small amount of net bearish progress on the day between the open and the close, so we have had something of a small shift in momentum back to the sellers in net terms, whereas it was with the buyers previously. So that does suggest a potential for a change of trend, but looking at where the candle is actually closed, it's closed up between the midpoint level and the high, suggesting that the buyers have still maintained control of this market, although that control that they have for today's trading is somewhat lesser than it has been for the previous two trading days, and that by itself suggests potential for a change of trend. This small body candle is actually within the body of the previous candle and suggests that we have a potential Japanese candlestick reversal pattern here, and it's a potential harami pattern, and that's where we have a prior uptrend, we have a white body candle, and then a small body candle and a small black body candle that's within the body of the previous candle, and we do require confirmation of that change of trend. So confirmation would be a candle with a lower high and a lower low, but just considering that we have that solid support just below where the market is at 1700, we could still see the trend change to the downside. But the sellers actually failed to close below the 1700 level. That is a possibility because it is going to be very solid support for this market. In terms of the Fibonacci extension, and we are in a first time frame uptrend, and we're examining the relationship of the first time frame uptrend to the previous time the market was trading up, and here we've seen the market trade in a bullish manner through the 100% level. If this trend doesn't change to the downside, there is a possibility of the market testing to the 161.8% level, which is at 1719. In terms of the Fibonacci retracement, we are in an expansive mode of that. The market has tested higher and on its way towards the 161.8% level. That's at 1712. The market traded to 1709 for the previous day's trading. So the market's getting up there. It wouldn't surprise to see the market test up to that level, and let's watch how it reacts if it does. But just remember, we do have potential for a change of trend. We want confirmation of that change with this harami type pattern, and with the buyers losing an amount of momentum with the size of the body reducing and the color of the body reducing. So there's a possibility of the market trending down in that first time frame. In terms of Ichimoku, obviously a bullish market in all three time frames. The market is trading above the cloud and well above the cloud, and at the moment is looking rather overextended, so it wouldn't surprise to see the market retrace back towards equilibrium. The market's also trading above the Kijun-sen, the pink line, so we have a bullish market in the medium term time frame, and that Kijun-sen is now pointing flat, and price action tends to be attracted back towards a flat Kijun-sen, and that is quite important. There is a suggestion that the market may test lower, but remembering 1700 round number level of support is important. In terms of the Tenkan-sen, the green line here, we are trading above the Tenkan-sen, so the market's bullish in the fast term time frame. And if the market does trade down through the 1700 level, we would expect the market to find some support around the Tenkan-sen around 1693. Support just below there also at 1687, and then at the top of the highlighted yellow area where we saw the market hold a support in the recent past, that's around the 1675 level. Looking across here at the Chiga span, that's well above the corresponding price action, so it's highlighting the strong momentum that the market has in that longer term time frame. It's suggesting that there is good support for this market market trading higher and supporting the market trading above all of these Ichimoku indicators, and the likely scenario is that the market may retrace back to around the 1700 level or even just through and bounce off there. What we don't want to see is a test down below 1700 and a bearish close down below there. That may suggest a change in sentiment in the market and could suggest lower levels, but I suspect that we're going to see buying coming in if we do test down around the 1700 area.